Guys, this morning we're going to have a very interesting session. I'm very excited to introduce my guest this morning, Jilnaught Wong. Jilnaught is a Professor of Accounting at Auckland University. Before we do though, I just want to say thank you very much for those of you who've been commenting on the videos and giving us your attention. I really hope that you find this interesting and you get some value from it. To that end, if you've got any questions or things that you would like to ask or have to even question our guest speaker, you're very welcome to put those up and join in. This morning, Jilnaught and I are going to have a bit of a chat about a few different things, but he is a subject matter expert in accounting. And in fact, his thesis was around, for his PhD, was around working out what actually informs accounting practices in business. And it's not always just good accounting practice. There's economic, political, and other factors that influence that. So I think it's a fascinating time that we're in at the moment, where, of course, the environment we're in has changed massively in the last month. And there's new changes to legislation that the government's actually brought in to try and create a little bit of comfort for businesses, but we'll find out how much that's actually going to affect businesses and perhaps, Jilnaught, your perspective on those. But maybe, Jilnaught, could you give us a little bit of insight into, I guess, what you're working on at the moment and where you see this taking us?
Yeah, thanks, David, for having me. David and I have knew each other from our Toastmasters days. While I'm still hanging there, David doesn't come to us anymore. And yes, you can see, he doesn't need to. He's probably so eloquent. He doesn't need to come to our meetings anymore. But we do miss him because he used to have some wonderful stories to tell us. At the moment, I'm writing a little bit. Some of you may remember that in 2010, May 2010, the national government rather abruptly took away the deductibility of depreciation on commercial and industrial buildings. I think they were trying to do that as a means of kind of dampening down the rampant growth in property prices. And I think it was also in residential. So they're trying to dampen down the growth in residential property prices because a lot of the property investors were getting this deduction via depreciation, which got them into a tax loss position, but nevertheless a positive cash position. So the government was trying to do that. So you can imagine what would happen when you know today that you're not going to get a depreciation deduction on your buildings for the future. Immediately, you know that your future tax liabilities are going to go up because you're no longer going to get that depreciation deduction. So what happened was that in accounting standards in New Zealand and throughout the world required all our New Zealand companies to recognize that tax liability today, because we know today that in the future we're going to be paying a lot more taxes because we're not going to get that deduction on depreciation. I hope that makes sense. But recently the government has changed that, and they say that from 1 April 2020 that you can now claim back depreciation on commercial and industrial buildings. So those liabilities that we set up back in 2010, will now start to come down because our future liability is now going to be decreased because we're allowed to claim depreciation on buildings. So that's a positive effect. But what I thought was rather unfortunate is that, considering the COVID-19 situation and the cash flow difficulties that companies are facing, why did the government not allow the deduction starting from 1 April 2019? Because
100%.
We're at the end of the 2020 year, so that would reduce the tax liability. Why kind of give you something that's only from now onwards when by the time we get to March 2020, most companies are going to be in a tax loss position anyway? So I kind of think that it is a great benefit. Permanently, it's going to be a good benefit. But today, the critical matter is cash flow. So my view is that they should have backdated that depreciation deduction to 1 April 2019. The second thing...
Sorry, Jilnaught. I was just going to say, so if you're just joining us, Jilnaught and I are talking about deferred tax and specifically the changes made to depreciation. And perhaps just if you can go into real layman's terms here, Jilnaught, because we're talking about stuff, I know some people have this, but wrapping my head around it, essentially, when you own property, previously you were able to depreciate the buildings.
And
And
get a
so,
deduction. Get a
exactly.
deduction, which reduces the amount of tax you got to pay.
And that's the key part here, is that
Yeah.
the amount of tax you're paying per annum is reduced because you're claiming this depreciation as an
Deduction.
expense. So
Correct.
whilst it's not an actual cash flow out of the business as it's happening, it does result in an increase of your cash flow because there's less tax to pay.
Well, it's interesting you make that comment that depreciation is a non-cash expense, and you're absolutely right. But what people fail to understand is that the cash did go out of the business when you bought the building.
Yes.
So remember that there is a cash flow. The cash flow went out when you bought the building, but when you depreciate it, it's no cash going out, but you're getting a deduction, which is going to reduce your taxable income and therefore reduce the amount of tax that you've got to pay.
So you're actually getting the benefit of having paid that money for the building in the first place, but you're
Correct.
spreading that benefit across the lifetime.
Correct. You paid it up front, so the cash went out up front, and you're getting the benefit over the next, say, 50 years, considering the life of a building.
So it's massive that they took it away in the first instance, but very interesting that now it's been brought back through as part of a raft of changes that the government's doing to try and ease the impact of COVID-19 on the economy and on the businesses in that economy.
Yeah.
But the part that seems slightly ridiculous to me as we're talking about this is that change has been brought in, but it only takes effect, 1st of April, did you say?
Yeah. So it's
businesses
forward.
If we're looking at a cash flow crisis in the business right now,
Yeah,
are you
we should be
saying we're going to have to
backdating
wait? At the moment, we have to wait for a year.
And of course, in that year, you're not going to have taxable profits anyway. So you won't pay any tax anyway, assuming our economic situation is going to be very, very tough for a lot of businesses. And given that you've got to be in a tax loss position by the time you come to March 2021, what good is that depreciation deduction?
This is fascinating. So what can we do?
Over the long term, I think it's a great thing. I mean, you should be given an expense deduction which has been incurred in earning income. Yeah.
But in terms of actually bringing cash relief to a business right now,
yeah, it doesn't. It's just like the government's also now proposing a change whereby tax losses can be carried back. So, for example, let's say this year going from 1 April 2020 onwards, if we make a tax loss in the next year, we will get a refund for the tax that we paid last year. But of course, this benefit doesn't actually happen until we actually incur the tax loss. During the year ended March 2020, most businesses would have made a profit because this lockdown only came on the 26th of March, by which time we were at year end anyway.
Yeah.
So losses didn't actually arise until post 26th of March. And for all intents and purposes, it's from 1 April. So really, you're going to get a benefit in the future in 2021 when we make a tax loss, but the cash won't come in until then. Whereas we need cash benefit today.
So actually, these changes, whilst positive, they really are affecting something a fair way down the line. Is there anything, I guess the government's, and it's been highly publicized, about wage subsidy and
Which is
support?
Great. Yeah, that's been very beneficial for businesses. No, I think the policies are good policies. I just think the timing needs to be adjusted to maximize the cash flow benefits to businesses.
And what do you think the chances of these pieces of legislation being amended further?
Well, no one's come to ask me about it, but hopefully...
Here we are, mate. Here we are.
with your podcast, someone will hear about it. And I mean, I often say that if you're going to do a good deed for our businesses, then why don't we do the whole thing? I mean, there's a wonderful Jewish saying which says, half a mitzvah is no mitzvah, which means is no good deed. So if you're going to do a good deed, let's do it for its maximum impact, because we know that particularly in this environment, cash is king. I mean, people need the cash, you know. Profits is one thing, but cash is absolutely crucial. There's a saying that goes that revenue is vanity, profit is sanity, but cash is king. And no more time is that valid than right at this very moment. Yeah.
Yeah. Give us that again, please, Jilnaught.
Revenue is vanity, profit is sanity, but cash is king. And it's so true today. And when you look at businesses, particularly small businesses, which is the majority of the businesses in this country, where people have spent their whole life working to build it up, invested everything in it, mortgaged their houses, everything, and it's just kind of disappeared on them. Let me give you two examples. Big companies like Air New Zealand and Auckland Airport. A couple of months ago, these companies were printing cash. They had cash coming out the year. I mean, Air New Zealand had over $1 billion worth of cash. And guess what? When this COVID-19 hit, they had to go to the government to get this $900 million loan from the government. That's how quickly this thing affected all these businesses. So you could imagine what it's like for these small, medium-sized businesses, family businesses. They can't go to the government cap in hand asking for more capital. So there must be other ways to help them. I think the government's doing some wonderful things in terms of, I think, the wage subsidy. I think that's very helpful. But is it going to be enough? And I applaud Grant, and I think he's really stood out as somebody who's working very hard and thinking strategically about how he can help New Zealand business. And he's really come out up in my estimation. Yeah, I think he's like the Deputy Prime Minister in my view.
Yeah. So interestingly enough, you're not throwing stones here. You're actually saying a lot of the work that's been done is excellent, but they've done half a mitzvah.
Yeah,
They could have absolutely nailed it to actually bring this cash relief, but instead the effect is largely going to be relevant to profit rather than to their cash flow.
Yeah, sure.
Yeah, and that's the scenario. Going back to your quote there, revenue being vanity. Well, that's the first thing that's been hit massively. And of course, the canary in the coal mine was tourism. And that's affected massively the likes of, as you say, the airport in New Zealand. But the profit piece, of course, as revenue drops, if fixed costs remain, then profit drops alongside that. So the government's bringing in legislation that doesn't just provide wage subsidy, but also tries to change that to bring profit. But the cash piece is still going to be the pinch point. What else can be done?
Well, they might think about reducing companies' tax obligations for the year ended March 2020, because most of them will be in a taxable profit situation in 2020. And because you're in a taxable profit position, you have a tax liability. I would say that the government could allow some sort of estimate of some tax losses that's going to arise in our current year and allow that to be carried back to 2020. And then if you've overclaimed your forecasted tax loss, then you might have to pay some tax in the future. It's never been done before, but it's no reason why we can't be innovative and we need to do something. Just because I made a profit in the year ended March 2020, I'll have to pay some tax, but I really haven't got the cash to pay the tax.
So you're almost talking about a reverse provisional tax.
Yeah. And
makes good sense.
It makes good sense. I mean, these are unusual times, and we've got to think about some extraordinary ways to help businesses, because it's the lifeblood of our economy. Yeah.
I'd love to try and tee you and Mr. Robertson up with a bit of a chat. I think you get on well and perhaps come up with some even more productive ideas.
I'm sure he'd be very receptive to it, because I think everything that he's done so far is really with the business and the economy in mind. I don't believe there are some commentators who would say that it's done for political reasons, but I don't believe that's the case. I mean, by the way, I'm not a Labour voter, but I sit back and look at it objectively, and I think he's doing a great job. Yeah, and it's very tough, right? Because we haven't got a template, we haven't got a rule book on how do you handle these sorts of situations. We went around in 1918 or 1919 with the Spanish flu that killed over 20 million people. We just have never been in this sort of environment. So I think what he's been coming up with has been admirable. I commend him for that. Yeah.
I think actually, and we've heard other comments like these from people about Jacinda, for example, but it's actually, this is the scenario. We've got a crazy event that impacts everyone, and the best political decisions are literally the best decisions. If you can make great decisions that help people through this time, that's going to be great politically. And so I think it's quite an exciting time for that, because as someone that's fairly centrist, I feel like too often we've got both political spectrums vying for attention and making political moves, as opposed to just thinking, well, what's actually really good, and let's just do that, and let's not worry so much about trying to get the publicity or throw a stone here. Let's just make good progress. So there's going to be some positive stuff, hopefully, that comes out of this.
Yeah, I mean, we're in an unusual situation because people think upon this as a COVID-19. It's a black swan event, right? It's something that doesn't happen every day. And I think it's two simultaneous crises that we're dealing with. One is a health and safety crisis, and the other one is really about an economic crisis. There are two things that we're dealing with, but I think first things first. I mean, you got to take care of the health of the people, because unless we take care of the health of the people, we won't be there to enjoy a future. So it's absolutely critical that health comes first. But then we also need to think about the economy, and the tough decision here is taking on all this debt that the government is going to take on. It's only going to be paid back by future generations. So you got to balance. Do we increase the life of the elderly who's already enjoyed longevity at the cost of ruining the prospect of a prosperous future for the future generation? And this is a delicate balance that the government's having to work with. And I mean, Matthew Hooton had a lovely piece in the New Zealand Herald a couple of Fridays ago that it's really an ethical decision that we have over here.
And it's a challenging one, because whilst it's an ethical conversation, it's also a decision that's being made without without a playbook, without a precedent.
No precedent, no templates, no rule book. Yeah.
And it's hard to know, isn't it? Because, for example, looking through the deaths that have occurred, it seems, and of course, my heart goes out to the families that have suffered loss. But I don't know the individual situations. It seems possible that someone can die with COVID-19 as opposed to from COVID-19.
Yeah. I think one statistic that we haven't seen that I've been asking, just been in discussion with some of my friends, is that we know there have been 12 deaths from COVID-19, but during this period, how many deaths have we had from our elderly from the underlying causes? It might have been 50, it might have been 100. I don't know what the figure is, but I think it's interesting to just stack that statistic against these 12 deaths. And basically, the health experts are saying that all these 12 have underlying health issues in any event.
Yeah, and certainly it's almost as if we are in a trance where it relates to natural death, and not even natural. Let's talk about the road toll, for example. We're almost like we're in a trance where we it's not that we accept it, but it's there, and it's been there since I can remember. And so therefore, it seems like something you can't really do much about. But if you look at the massive financial investment in preventing further loss due to COVID-19, and you imagine that even just a fraction of that was put into better safety for roads, for example, then you would see that existing toll hopefully drop. And you kind of go, man, this is a really delicate and challenging conversation to have. But I don't think we need to be afraid of having it. I feel like there's a feeling out there that if you say something contrary to perhaps the common train of thought.
No, I'm very sympathetic to this whole issue because I have a 90-year-old mother, so I actually feel it, and then she lives in a retirement village, so I understand that very, very well. And I don't mean to be cold and callous, but it's really that delicate balancing that has to happen, because the cost of the economy has just been unbearable. It will be unbearable for a few years to come, and I don't want my children and my grandchildren to be burdened with this debt. So we need to get it up and going very, very quickly.
So what does it actually mean to say that even my kids perhaps saddled with this burden of debt? What does that actually mean?
It means perhaps that they probably won't get as good an education system because we don't have enough money to plow into it. They may not get interest-free loans when they go to university. It means that we may not have the best of the hospitals that we need in this country. It means that their future taxes are going to be higher because the government needs the revenue to pay off the interest and the principal on the debt that they are. And as a result of paying more taxes, they won't enjoy perhaps their ability to buy their own homes, all these benefits down the road. There are a lot of consequential benefits that could arise. Just think about it from an individual point of view, burdening yourself with debt. I mean, it really constrains your ability to enjoy life, isn't it? If you're burdened with debt.
I
And you,
guess it depends on what kind of debt it is. If you're taking on debt that provides a return on your investment, it's quite
oh,
different than taking on debt to pay for the car you just wrote off.
yeah, well, I totally agree. But I think we've been very lucky in New Zealand so far because I understand that our debt levels were rather low, thanks to the national government and, of course, Sir Bill English, who did a terrific job as Minister of Finance in building us a very strong balance sheet and low level of debt so that we now have this debt capacity to go and borrow more. And I think the government is doing the right thing and borrowing more because we have to look after our people. Yeah, absolutely.
Yeah. We've got a question here that's come from Philip Oldham, who says, surely when you sell the building at a later date, you'll be liable for tax on the profit. This relates back to what you were talking about at the
Yeah.
start of the clip.
Well, that's fine. You've got the profits then to pay the tax, right?
Mm.
I don't have a problem with that. If you sold it and you've made a profit, you should be paying the tax. Yeah, it's a thing called depreciation recovered. So be it. You've got the cash from the sale of the property. You've recovered the depreciation, which previously you claimed a deduction on. Now you've got to pay the tax on it.
Yeah, so we're actually, this is inverting the triangle, and it's actually getting cash in the balance sheet as opposed to deferring it for a better payoff come the sale.
Yeah, you've claimed a deduction, and now you've made a profit, and you've got the cash, so you've got to pay the tax on the depreciation that you've recovered. I don't see a problem with that at all. It's nothing. It's perfectly okay. Yeah.
You referred to a column that you read by Matthew Hooton, and I apologize, we kind of skipped past it a little bit, but what's your précis on that?
Well, that's he wrote that not last Friday, but the Friday before, and I think he was just talking about the ethical dilemma that's posed to us because of this twin crisis of a health and safety crisis on one hand and an economic crisis on the other. And it's when you focus on the health and safety, particularly with prolonging the lives of those who've already enjoyed longevity, it comes at a cost to the future generation because we may have ruined the prospects of a very prosperous future for them because they are being set. The government now has all this debt, and the government's got to pay the interest and the principal on that debt. And where does it come from? It has to come from the next generation. People like me, who's probably going to be retiring in 5 years' time, I'll make a contribution to paying some of that debt. But our children who are in their mid-30s will have another 30, 40 years of their working life, and they'll be burdened with it. And then our grandchildren who are now, say, 5 years old, who's got another, 60 years or 40 years of their working life from the time they come onto the workforce. They will be paying it off. And so the government will be looking at ways in which they can generate revenues from these people. It may be higher GST, it may be high income taxes. I hope Jacinda's right and she doesn't bring back a CGT. There could be a wealth tax. There could be all sorts of taxes. But yeah, so that's really the cost of the current borrowings to support the people in our nation. And I agree. I think we should do that. We should do that. We have a strong balance sheet, and that's why we have a strong balance sheet. So we can do this, and we want to provide the safety net, a tight safety net to look after our people, because without our people, we won't have a future. And I'm reasonably positive long term that our people are resourceful. They're ingenious. They work hard. So once we get out of this, and I think we will work together to overcome it.
It's certainly, as you say, there are going to be consequences of the current situation,
Yeah.
long term.
Yeah.
But on the positive side, there already have been some changes to legislation there from your perspective, make better sense anyway.
I think good policy, the timing needs to change.
Yeah.
Yeah.
And you've also talked about this idea of, in my words, but just how I understand it, almost like a reverse provisional tax. Have you got any other ideas that the government could perhaps pick up and run with?
Well, the government's been also wanting to rebuild the economy. This is before COVID-19 with research and development grants, which I think is a very positive thing. I think that's, but I don't know where that is. I don't think it's a priority at the moment when we are fighting a fire, And I think when you're fighting a fire, it's not a time to talk to the architect, it's a time to bring the firemen in to douse the fire out. So So once we got the fire under control, I think, which is what we're trying to do, then we need to then bring the architects and the planners into, and I think that's already going on. For example, with the infrastructure, whatever it's called, that Mark Binns is the chair of, already thinking about shovel-ready projects that we're going to work get into, to get the people going, to get the economy going, to get the people working, to get the businesses running. And another thing that all these consequences down the road. I never thought about it. But when Spark and Vodafone and 2 Degrees came out and said their revenues are dropped from roaming charges. Now, did you ever think about that? Because we travel, we don't roam on our phones anymore, and that's a huge revenue loss for these telcos. I mean, when I went overseas, I'm purchasing their packages all the time because I'm using up all this data. And all that revenue goes because people won't travel anymore.
I knew it. I knew those roaming charges were bloody predatory.
Yeah. And look at all the revenues have gone from these organizations. And look at us, because we think that Zooming is so effective. People won't even travel to go. I won't fly to New York for a meeting. I can do it on Zoom. Why? And I'm going to save the planet, right? It's going to be good for the emissions, right? Why do I need to do that? At the University of Auckland, we were given 1 week to convert from lectures, which I used to call the sage on the stage, to online learning, because we had no choice. We have been talking for a decade. People have done research. They've been writing articles about the future of work. I'm sure you would have heard those words, the future of work. Guess what? It's here. And we're given 1 week to put it in action. And that's why I say we are resourceful people. We work hard, we think about ways of doing it. And before I came online with you, I was running a class with my postgraduate students over Zoom. And I've scheduled another one for them on Thursday so they can go and do some work, think about the questions, and we'll come back and have another meeting on Thursday. And when you think about our undergrad classes where we could have up to 500 students in a class, we're teaching them through Zoom. Yeah. So
this is a really
how ingenious we are as a human race, that when we've got the lion right up our backside, we actually get moving and we can get things done. Yeah.
You know what? It's so interesting because it's almost two pieces. One, the innovations, the ideas, the creativity, the things that are already in the pipeline. This is the catalyst to make it happen now. The future of work is now. And at the same token, this is going to force certain ideas and ways of doing things that are now redundant out. But some of them will be out temporarily and others will be gone forever. This is the process of creative destruction. And I love the analogy you talked about with the firemen in the building. It's not the right time to talk to the architect. But I tell you what, while the steam is rising and the building is no longer on fire, definitely those who have had the blueprint from before this are saying, now's the time, let's do this. And others are rapidly drafting. I think this is such a positive message. And I love the way that it's affected the establishment, if you know what I mean. Like, there's always people that are ahead of the curve and wanting to bring things in. For example, in my real estate office, we were using DocuSign. But if I look at the team, I only probably had 2 or 3 people that were using that for almost every transaction where it was applicable. Most weren't. But now, real estate offices across the country are using DocuSign or FlexiSign to get agreements signed. It's the only way. And so it forces this wholesale change. But I don't think we're going to see the elimination. Like, for example, I would absolutely love to catch up with a beer, catch up for a beer with you, Jilnaught, once this is all over. It's not going to stop, but it just brings us closer, faster, better.
Sure. No, I think human beings crave connection. We crave fellowship. I often say, you might remember in your Toastmasters days, when you start your speech, what do? You say, my fellow Toastmasters. Why do you say fellow? Because we crave fellowship, right? We want to be with each other. We want the social connection. It's wonderful to talk to you over Zoom, but I think it's also lovely that we could sit down and have a beer and have a meal together because it's just that personal touch is so important. Yeah. You know, like you think about your children. Oh, yeah, sure, you can talk to them over Zoom, but nothing like the personal touch, sitting around a table having dinner together. You know, the chit chats, the conversations. These are invaluable thing to build relationships. And I think, thank goodness for the wizardry of technology that we've been able to do what we're doing today. And you'll be able to relate to this, that we had our division, Toastmasters division contests, and we're doing it all on Zoom.
Amazing.
Whereas before we used to say that if you're going to give a speech, it's got to be live on stage so that you can use the stage, you can use your body action, your body language, you can move along the stage. But you know, we've learned how to do that on Zoom, and I myself was one of those people who was against using Zoom for contest. And then I said to myself, Jilnaught, stop being so precious. Rather than being another hurdle in the system, why don't you try and embrace it, espouse it, and engage with it? And it's worked really well. Yeah. Given the current situation, it's worked very well. Yeah.
Jilnaught, thank you so much. I think that's a wonderful message. Thank you. Really mean that. And I think that's just a wonderful way to approach the situation we're in. You know, you can either become another hurdle or you can embrace it, engage
Yep.
with it, espouse
Yep.
it, move
Yep.
with it, drive it forward, make it
Yep.
better. You're the man. I really appreciate your time and your thoughts. Thank you for sharing with us today.
Okay. Good luck. Hope your listeners enjoyed it. Bye.
Absolutely, mate. I know I did. Cheers.
Okay. See you later. Bye.